press the bell icon on the YouTube app and never miss another update.
Friends, welcome once again to your channel Profit in Equities. Now, Edelweiss is one of the top financial services firms in India. Here we talk about their 5 top picks for the year 2018. Also friends, if you feel that you benefit by seeing the videos that we put up on this channel, please do subscribe to this channel and also like, share, comment to our channel so that we reach more people going forward. Also friends, if there is anything that you would want to see us discussing on our channel, please do let us know in the comment section below, and we would earnestly work so that your expectations that you would have by putting in the comment section are met. Now, we are not always able to reply to all the comments, but rest assured we read all of them and we try our best to solve any of the issues that you do have. Now, the first company on the list is Asian Granito India Limited, which is engaged in the business of manufacturing of tiles. The company offers tiles such as wall and ceramics and marble and also quartz. Now, if you were to look at the 1-year chart for the company, it's a beautifully uptrending stock which has been on a consistent uptrend. The company is still a small cap one with a market capitalization of 1734.09 crores. The EPS is 10.33, which translates into a price to earnings ratio of 55.79, which is higher than the industry PE of 39.65. The book value is 118.80, which also translates into an expensive price to book ratio of 4.85. The promoter holding here is also low at 32.32. Now, coming to the rationale why Edelweiss thinks that it could do well going forward. Now, Edelweiss estimates AGL to clock revenue CAGR of close to 15% over FY17 to FY19, driven by the increase in tile sales volume. Now, this is estimated to grow by a CAGR of 12%. Now, with an improvement in utilization, introduction of new products and increases in distribution, the reach should go to 5,500 sales points. Also, they estimate AGL's operating margin to catapult to 50 BPS. Now, Edelweiss also thinks that GST implementation is expected to lead to market share gain for organized players such as Asian Granito Limited. Also, they believe that the boost in company's profitability in the coming years is likely to lead to a re-rating of the valuation multiples. They reiterate their buy recommendation with a target price of Rs 640 based on 25 crores FY19 earnings. Now, the second company on the list is Century Plyboards India Limited. Now, this company is available at 339.25 and Edelweiss has placed a target of 390 on the company. Now, Century Plyboards India Limited is a plywood manufacturer and the company's segments include plywood, laminates, CFS services and others. Now, if you were to look at the 1-year chart for the company, you would see that the company was on an uptrend for the initial part of the year. Since then, the company underwent sort of a rounding bottom formation and after that has been on an upward trend. The market cap is 7549.23 crores, which means that the company is a mid-cap one. The EPS is 7.53, which translates into a price to earnings ratio of 45.05. The industry PE here is 38.84, which is lower than the company's PE. The book value is 31.84, which translates into a price to book ratio of 10.65. The debt to equity is 2.0177, whereas the return on equity is 0.1123. The promoter holding here is decent at 72. Now, the reason why Edelweiss thinks that this could be an outperformer going forward are things like, in spite of superior return ratios compared to other building material peers and high free cash flow generation, Century is trading at attractive valuations compared to most of its peers. Now, they also think that Century's prudent raw material sourcing strategy and capital allocation is estimated to yield close to 30% ROCE, which is higher than other building material companies. Also, the cut in GST rate on plywood from 28% to 18% is envisaged to have a huge positive impact on the organized players as compared to unorganized share. Also, most of the capex for this company has been completed, which is also going to be a positive factor going forward. Now, the third company on the list is Everest Industries Limited, which is available at 579.80 and the target price here has been placed at 624. Now, Everest Industries Limited is engaged in the manufacturing and trading of building products such as roofing products, boards and panels, and also other building products and accessories, also in the manufacture and erection of pre-engineered steel buildings and related accessories. Now if you were to look at the 1 year chart, you would see that other than a mid-year dip, the stock has generally been on an uptrend. The company is still a small cap one, and the market cap of the company is 896.09 crores. The EPS is 13.90, which means that the company is available at a price to earnings ratio of 41.71. Now this is expensive compared to its industry PE of 34.75. The book value here is 226.70, which translates into a price to book ratio of 2.56. The debt to equity is 0.7367, whereas the return on equity is 0.0309. The promoter holding here is on the lower side at 48.66. Now, Edelweiss believes that the company is the pioneer of the fiber cement products in India and also manufactures roofing, ceiling, wall, flooring and cladding products besides offering pre-engineered steel buildings. Now, this makes it like a dominant player. It is also among the largest PEB companies in India with over 2000 PEB projects designed and erected. Also, this sector is expected to grow with rising demand for warehousing and on the back of rise in e-commerce and agricultural enterprises. Now, Birla Corporation Limited is available at 1152.45 and is the penultimate company on the list, and there the company has been provided with a target price of 1296. Now, Birla Corporation Limited is a holding company and offers products ranging from cement to jute goods, polyvinyl chloride, flooring covering, as well as auto trims and steel castings. And you would see that the company has been on a consistent uptrend throughout the year. The market cap is 8874.48 crores, which means that the company is a mid-cap one. The EPS is 12.13, which translates into a price to earnings ratio of 95.01. The industry P here is 45.90. Now, the book value for the company is 412.20, which means that the company is available at a price to book ratio of 2.80. The debt to equity is on the higher side at 1.5818. The promoter holding here is average at 62.90. Now, the reason why Edelweiss thinks that this could be an outperformer going forward are, now B Corp has reported significant jump in EBITDA margin due to Reliance Cement's acquisition. Also, they think that B Corp is one of the lowest cost producers among mid and large size cement companies. Now, the company's freight and forwarding, raw material and other manufacturing costs are 23%, 15% and 5% respectively, which are lower than the average cost of top 10 cement companies, while also the power and fuel cost is 10% higher. Also, B Corp is one of the lowest cost producers among mid and large size cement companies, and this gives it an added advantage. Edelweiss estimates that B Corp's revenue is going to post 19% CAGR over FY17 to FY19, primarily led by higher volume and marginal growth in realization. Now, the last stock on the list is Campin Homes Limited, which is available at 472.85, and here the target has been set at 588. Now, Campin Homes Limited is a housing finance company which offers housing loans to individuals, housing loans to builders, developers, and also loan against property. Now, if you were to look at the 1 year chart for the company, you'd see that the chart is almost like divided into two parts. One where there has been a consistent uptrend till the middle of the year and then a consistent fall. The market cap is 6296.30 crores, which means that the company is a mid cap one. The EPS is 20.78, which translates into a price to earnings ratio of 22.76. Now, this is a bit cheap compared to the industry PE of 27.20. The book value is 80.83, which translates into a price to book ratio of 5.85, which is on the higher side. The debt to equity is also very expensive compared to the other companies, which is like 9.7704. The return on equity is 0.2567. The promoter holding is also on the lower side at 30.65. Now, Edelweiss reasons that Campin Homes has one of the finest asset quality among HFCs with GNPA ratio of 0.38% compared to 0.4243% for key housing finance peers. The cost to income ratio of CFH is also close to 15%, which is one of the lowest among housing finance companies barring HDFC Limited, and the cost of borrowing is also 7.8%, which is one of the lowest among key housing finance company peers, where cost of borrowing ranges between 8.1% to 8.88%. Now, they have projected loan book CAGR of 27% over FY17 to 20, which gives it an added advantage and is the basis of their rationale for going ahead and projecting the target. Also, friends, please don't treat this as a stock recommendation. Please do your own research, and this is all what we wanted to show you for today. Thanks for watching, and we will see you soon with another video.